I think there we are. Now we're live. Great to be with you all. We're really excited because so many of you showed up on time, which is very unusual. That we had people actually here early for this event. So really great to be with you. This wealth breakthrough journey has been a heck of a journey, and I have to say that I'm excited tonight because two of my favorite interviews. I'm talking about genuine guys that really care about what they do, and they care about you, quite frankly, and you getting results, are joining for this tonight. Thank you if you submitted questions ahead of time. We did get a lot of questions. I'm going to try to get to as many as I can. I can't promise I'll get to them all, but certainly we'll get through as many as we can. While you're out there, do check in. I see a lot of you have checked in already, but go ahead and give a shout out, your name and where you're from. And if you happen to have a question that you didn't submit previously, feel free to submit it in the comment thread, and we'll try to get to as many of those as we can also. So we have Marco Santarelli, at least on my screen, he's below, and you can see our names or placards are there. So thank you, Marco, for being here, and also Zach Scheidt. So Zach, also, thank you so much for being here. I got to be in the room with you guys and sort of have our interview and have really good interaction. Here, we're going to do it virtually, but I'm excited for that. And Marco, why don't we just start with you, if you don't mind, just giving just a thumbnail of your background, your areas of expertise and specialty, so that people can just get that frame of reference before we start.
Sure. So thanks, Patrick. So for a quick thumbnail, I consider myself a serial entrepreneur. I've been entrepreneurial since I was a teenager. I bought my first real estate investment, my first property, at the age of 18, and the writing was on the wall going forward from that point. I just continued to invest, build small businesses, fail, succeed, fail, and succeed. And so that experience has taught me a lot. I really went full-time real estate investing in 2003, built a very large portfolio, and then started the existing business that we have today, helping other people achieve that same success in building their real estate portfolios for passive income, creating wealth, and essentially holding people's hands and guiding them through that process. And we love to teach what we do, and we do it freely, and it's our passion.
Awesome. Thank you, Marco. Zach?
Yeah, so I actually got my financial start at a small hedge fund in Atlanta years ago when I was a young father, and I actually worked under an older gentleman who had a lot of success in the market, and our job was basically to help the rich continue to grow their wealth and to generate cash flow from the wealth that they put together. So it was a great learning experience. I loved it. I enjoyed my time with the clients, but there got to be a point where it was a little bit weird helping the rich get richer, while meanwhile, because we were a hedge fund, we were not allowed to help people who were not millionaires or not accredited investors. And so there was a little bit of a disconnect between the people that I wanted to help, the people that meant something to me, and the clients that we had at the hedge fund. I am a father of 7 kids. Oldest is 20, almost 21. Youngest is going into 2nd grade this year. And that's important to me because a lot of the people that I talk to now are family people as well. And it's my goal to help you guys generate income. And we can use a lot of the same strategies that I learned at the hedge fund. But it's not just about money. It's about being able to set yourself up in a way that you don't have to focus on money, on investments, on finances. And so kind of my mission, my goal is to help my readers in my community build income so that they can focus on the things that really matter in life. And yeah, that's what I'm passionate about. That's what I'm excited about.
7 kids, Zach. So are you considered an overachiever, or
Yeah, we finally figured out how it was happening, but we're a keeper. Very, very thankful. We might rent 1 or 2 of them out every now and then. We need to get them out of the house, but no, they're all really special to me, and I'm thankful to have the opportunity to be a dad.
I'm seeing maybe a potential new territory to explore. Maybe the book title would be "Kids as Cash Flowing Assets." So that's how we work that out.
No, I'm not kidding.
That's so great. So, Marco, let me ask this. Just kind of in short before we get into questions. I'm going to ask Zach a question too. Also, what are the virtues of real estate investing and the way that you do it? You'd say, okay, this is why I lead people on the path I do. What are the virtues of the upside of real estate investment?
Well, I mean, when it comes to investing, you only have so many options, right? You know, you can invest in paper assets, stock market, bonds, mutual funds, ETFs, real estate, which is a hard asset. I don't necessarily consider gold and silver to be an investment. And the reason I don't consider it to be an investment is because it doesn't generate regular cash flow. It's a preservation of wealth, and it's a store of value, and it's been money for the longest time, thousands of years. But I don't necessarily consider it an investment. When you look at real estate, it's got all these different aspects or facets, if you will. You got income from the cash flow, the monthly and annual cash flow that comes in from the rental income. You have equity growth in two ways. You have appreciation over time, and that averages out to whatever it may be, 4 to 6% plus or minus, depending on the market. You have the amortization of the loan, which is another form of equity growth. That comes from the payoff of the mortgage, the loan on the property that is not you, but your tenant paying it off. So that's the third kind of source of income, if you will. The fourth one is the depreciation. It's essentially a zero cost deduction that the government, the IRS, allows you to take without having to spend a single penny for, and that can help lower or even eliminate your passive income. And if you're a professional investor, it could eliminate all taxes, or at least deduct from all your taxes, passive and active. And then the fifth aspect, if you will, from real estate, and the reason I love it, and this kind of finishes your question, is it gives you the ability to leverage your investment capital as much as 5 to 1. So if I can purchase a $100,000 investment property, a 3-bedroom home in the Midwest or in the Southeast for $100,000, and I only need to put $20,000 down and borrow the other 80%, the $80,000 from lenders, the banks, whatever, that's OPM, other people's money. That's pretty powerful because I control 100% of an asset. I get 100% of the benefits, 100% of the depreciation, 100% of everything, but I've only put 20% down. So that leverage is powerful. And when people understand that they can take their investment capital and stretch it and control more real estate and get all the benefits of it, it really makes real estate investing, especially residential real estate investing, very compelling and very powerful.
That's very compelling for sure. Thank you for that. Before I have a question for you, I'm just going to do some shout outs. So, and thank you for everybody who's checking in. We got Dennis Mohan, checked in 10 minutes early from St. Louis. Hello from St. Louis. We got Live Channel 1 from New York. Carolyn Landfair from Southern California, probably close to Marco over there.
Yeah.
You can Marion Schmidt from Salem, Oregon. Investing Life for hello from Arizona. Alvin Locke from Florida. Sid Frazier, glad to be here. Hot outside. I don't know where you are, maybe Phoenix. Thelma Brown from Columbus, Ohio. Tariro Sibanda. Sorry if I wasn't good on my pronunciation. From Mauritius. Where is Mauritius? Anybody know where Mauritius is in the world? Sounds familiar. Hello from Maryland, from Tony Johnson. Ninja Polar Bear checking in from Alberta. I wonder what Ninja Polar Bear does. Horatio from Miami. House of 305. Lori Finch, aloha from Hawaii. We got Sylvia from British Columbia. So, and we've got so many more. So welcome to everybody from Dominican Republic, Pennsylvania, New York, Michigan. You're checking in from all over the world. It's really great to be with you all. South Africa, welcome. Boy, a lot of time zones here, and more people from Hawaii. So anyway, great to be with you all. Thanks for checking in. Continue to check in, post comments and questions along the way. We'll be looking for them. So Zach,
sir,
you spoke on this is very interesting because it seems that money and fortunes are made in the hedge fund industry, and it seems to be sort of a private club that you have to have a fairly significant amount of net worth to enter that club.
Yeah.
But is it possible for people to take the concepts of investment and wealth development that hedge funds utilize, and for lack of a better term, but the common person to be able to actualize those?
It absolutely is. And that's one of the things that sort of frustrates me sometimes is people look at hedge funds or mutual funds or professional investors and they think, oh, wow, those guys are amazing because they can do this, that, or the other. When the fact is that most professional investors don't outperform the market. They're usually just average, and we can all do average just by buying the S&P 500. So there's nothing really special about a professional investor other than somebody's paying them to do it. And in fact, that's one of the big differences between individual investors and professional investors, in that if you're an individual, if you're investing for yourself, you don't have to pay a professional to take care of your assets. So that's one win you have right there, is you're not paying somebody else to take care of it. And another one is, you're not, as an individual investor, you're not tied to some of the same rules that professional investors have to take. Like, they're not allowed to have more than a certain amount in a one particular stock, or they have to stay focused in one area, whether that area is doing well or doing poorly. So as an individual investor, you have all the flexibility to be able to do what works best for your situation. So I would say, with the exception of a few simple tricks that you can learn and you can certainly do yourself in a regular brokerage account, there's really not that many differences between professional investors and individual, other than just learning how to take opportunities in the market and use those to your own benefit.
Nice. Incidentally, if you hear background noise, I live pretty high up in the mountains. And we've got, it looks like a bit of a hailstorm brewing and some heavy wind. So if my internet suddenly goes out, guys, just dig into the question sheet and go for it. Sometimes I have a microwave dish that I get my internet from, and with this kind of a storm, it could get questionable. But we'll hope for the best that will last for the next little while. One more question, Zach, before we jump into some of the questions that are submitted by the audience. We're in weird times right now, and I have this question actually for both of you. So I'm gonna ask you the same question, Marco, right after. We're in, I think, somewhat uncharted territory here. We've got enormous government intervention into the marketplace, and maybe rightly so. We've got a pandemic going on that's got the economy shut down like we've never seen before. Yet we have a market that is up, comparatively speaking, with all the chaos in the world that's going on right now, race riots, other such things, a very contentious election on the horizon. We have a market that's kind of holding, it didn't crash through all this. It's actually been growing through a lot of this. So how are you, and maybe it's the wrong word, feeling, but how are you feeling about the market in light of all what's going on right now? Is it just disconnected from all this other reality, or do you think there's something going to happen?
No, I mean, there's definitely some things going to happen, and they will continue to develop. I do think that the government stimulus and the trillions of dollars that have been plowed into this market is a big part of the reason that stocks have rebounded so quickly and are doing so well. As we talked today, I think the S&P 500 was it closed just a couple points or a couple percentage points from all-time highs. The NASDAQ has already hit all-time highs. And one of the ways that I think about this is the more money that comes in a lot of cases, you have families that are at home. They're getting paid just as much as they were paid back before they were working. They don't have as much to spend that money on. They're not going out to eat. They're not going to Disney World. They're not doing summer vacations. And that money is sitting there. And so what are you going to do with that money? In many cases, that money is going into mutual funds. It's going into other ways that help to prop up the market. So it does make sense that the market would move higher in this type of situation. And it could make sense that it would continue, because I don't think we're anywhere close to seeing the end of stimulus. And I want to be careful not to drag on too much, because I could talk about this for hours. But one other thing to think about is, and we had, Marco, you actually mentioned gold and silver, and we might have a spirited discussion on that. But one of the things that people are worried about with all of the money being plowed into the economy is inflation. And the government's, their actual measure of inflation hasn't shown much, and people are saying, oh, inflation's dead. We don't ever have to worry about that again. But one of the things that we are seeing right now is inflation of financial assets. That means stocks. So as more money is being plowed into the market, it is helping to inflate the price of stocks. And if you are in a position to take advantage of that, you can actually use that inflation to help benefit you, or if you want to say just to help you keep pace with that inflation. Either way, it's a good thing as far as being able to use the market to your advantage. So I do think that we're going to see a lot more volatility in the years ahead. I don't think that this is just a straight line up and we're not going to have to ever worry about the back and forths again. But I do think when you step back and look at the whole picture, there is some level of connection between what's happening in the economy and what's happening in Washington and what's going on in the market. Is that fair enough?
That's actually really great context. So thank you. Marco, what about the real estate market? What should we be thinking, given all this craziness going on?
Well, when you first asked the question and you mentioned the market, I was wondering, well, what market are you talking about? Stock market, real estate market, or something else?
Right.
Because there's so many different markets. You opened up Pandora's box here, because we could talk about this from so many different angles and perspectives and about different markets. And I agree with everything Zach is talking about. So when we talk about real estate markets, I'm actually bullish. But let's be clear, when we talk about the real estate market, we have to understand, and I mentioned this, in our episode on episode 4, that there's no such thing as a housing market or the market. The country's made up of over 400 metropolitan statistical areas. So when you talk about a market, the question I ask is, which market are you talking about? Are you talking about Detroit, San Francisco, Houston, or Kansas City? And even within those markets, you can be and should be even more granular, because what's going on within a particular metropolitan area will differ from the east side to the west side to the north to the south. But overall, I am bullish on real estate in general, regardless of the market, for the following reasons. Number one, we are, for the most part, still in a seller's market. There is strong demand for housing. We have a shortage, generally speaking, of housing across the country. And so when we are not keeping up in new household formations to keep up with the population growth, you're always going to have a bit of a shortage in terms of the supply in housing to keep up with demand. Now we've got millennials slowly coming out of the basements of their parents, and they're creating some additional upward pressure on the demand for housing. So there's always an ebb and flow. Real estate goes in cycles, especially at the local level. But with low interest rates, at really historically low interest rates that are expected to continue for some time now, what we're seeing is strong demand. Sellers who wanted to sell this year because of coronavirus pulled back, and we're seeing 40% fewer listings on the market of what we normally would see in the buying season in the spring and summer. So we've got buyers coming out of the woodwork wanting to buy because interest rates are low and they have a need for housing, whereas sellers are not putting housing out. So again, there's this upward pressure and demand for housing. So whether it's homes or rentals, there's a huge pool of people that need housing and want housing. So I expect housing to remain strong, even though I don't expect appreciation to continue doing what it has done in the last 4 to 8 years across the U.S.
So both you guys make me feel pretty good overall. So that's great, and I think there was sound reason and logic for it. So thank you for that. So I think we should jump into some of the questions right now, and let's just start with the first one I see up here. And I apologize, for you who are viewing right now. I'm looking off to the left because that's where the document is. So if I feel like I'm disengaged, I'm not. I'm just reading a document that's to the left of my camera.
It is as well. I'm looking at Patrick and the camera and the notes too. So we'll just make it work, right?
Yeah. But it's the nature of the beast. So just want to have. I like to just let people know what's going on. All right. Well, here's one that would. I was going to read one, but one just popped up from Christina. It said, "Marco, can you share your thoughts on getting into real estate that is outside of your area?"
Yeah, well, first and foremost, you have to get over the mental hurdle of being uncomfortable falsely investing in another area. I always like the example of, I do all my market research, and I believe Coca-Cola is the best stock to be invested in right now, but I live in California. I don't live in Atlanta. Am I not going to invest in Coca-Cola just because I'm not living in Atlanta where the corporate headquarters are? That's just absolutely ridiculous. You have to be completely objective and take emotion out of the decision making. So look at the country as 405 different potential markets you can invest in, and take a top-down approach. Look at the market, then the sub-markets, and then work on the neighborhoods, and then invest in the properties that meet your investment criteria. So the first part is in your head, educate yourself and get out of the mindset that you have to be investing within a 1 mile driving radius of where you live. If you're a fix and flipper, that's fine. But if you're a buy and hold investor and you want to maximize your cash flow and maximize your equity growth over time, you have to look at the locations that are going to fit that objective, that strategy. And it may not be your backyard. A lot of the so-called gurus and these flipping shows on TV, unfortunately, have kind of indoctrinated people to think that, yeah, real estate investing is about fixing and flipping houses. That's not real estate investing. That's a business. You've created yourself a job that can turn into a business. But unless you're buying and holding and creating passive income, it's actually not an investment. It's more of a flipping and a transactional business. Does that answer your question, Patrick?
Yeah, well, it was Christina's question. Yes, I believe it does, and I think the important point is that it's because of the strategies, and if you watch your episode, you really lay out the strategies. You talk about property managers and the like. It's not like critical that you have to invest in your own neck of the woods. It's really better to go out and look for where the opportunities are. So thank you for that. Zach, I think this one's probably in your arena. It says, is it a smarter money move as much as you can in cash, or is it smarter to put it on a credit card and pay it in full every month? So that's in Ohio.
Yeah. So I think just basically, do we want to use credit cards for our normal spending, or do we want to use cash? And I think it really is a personal decision. And of course, I'm not going to give any personalized investment advice. I would say that the fact that you're asking this question probably says that you're a little bit more careful and concerned about what you're doing, which is very important, because if you're going to use a credit card and you're going to use that in order to make all of your purchases, you must pay that credit card off at the end of the month. Otherwise, you get hit with just stupid interest rates that are not worthwhile, that do not help you in your financial position at all. For my family, I have a Costco credit card. I spend a lot of money at Costco just to feed our family, and I like to use that for my normal day-to-day expenses, because then I get benefits from Costco, and that works out really well for our family. And I do pay it off at the end of every month, and I don't pay any interest at all. There are a lot of credit cards that have great benefits. But I would just say that this is something you have to be very careful about, because it's one of the reasons they give you credit cards and they give you such a good credit line is because they know that if you're able to, it's going to be a lot more tempting for you to spend that money. Whereas if you only have an envelope of cash and you say, this is my budget for this week for groceries, or this is my budget for gas, or this is my budget even for going out and spending time with the family, you're more likely to stick with your budget than if you use a credit card. So it really goes back to how good of a planner are you, and how disciplined are you at sticking to that plan. And if you're not, it's okay. Don't beat yourself up because you have a hard time with a credit card. Just say, all right, I'm going to use the tool that works best for me, and that tool may be having cash, maybe in separate envelopes for different parts of your budget.
Yeah, thanks for answering that. And I think what I would say is that certainly there are credit cards that do provide certain benefits that are very worthwhile. I happen to have one of those Costco cards myself, and it's very worthwhile. But the seduction is there if to not pay it off and start accumulating consumer debt, which is not really very good debt. So thank you for sharing that. I think Marco, this one it's about properties. Let me ask you this: do you recommend taking money from a 401k to invest in buying properties? Vivian from New York is asking. So is it saying, hey, my retirement money is sitting there, I could put it in a few places, but maybe I could buy some properties with it? Is that something you recommend, or do you need more information to be able to answer that?
Well, I'll give you a general answer. Given a choice between cash inside a retirement account of some kind, 401k, self-directed IRA, and cash sitting outside, so the inside and outside. You're better off using the cash that's outside of your retirement account because you lose the tax benefits when you purchase real estate within a retirement account. You can't take advantage of the depreciation because it doesn't flow through to you. You can't touch it personally in any way, shape, or form. So if you have investable cash outside of a self-directed retirement account of some kind, you're better off starting there. Now, if you don't have a choice and you have a bunch of investable capital inside your 401k or your IRA, fine, you could use that. You'll still get most of the benefits of real estate. And if that is a good option for you, where you can get returns that are going to exceed what you can get elsewhere, then it would make sense. It's a discussion you should have with your team, whoever's your advisor, especially your tax advisor, because there may be some tax implications there. But there's nothing wrong with it. It's just not my first choice. You're better off investing in specific funds or promissory notes or something that provides fixed income that is more predictable. But people do it all the time, and there are sometimes investing or lending options available to people with self-directed accounts. You can usually get up to 50% leverage with purchasing real estate in your retirement account. Now, those loans aren't available today because of COVID. They basically pulled back, but they will come back. So.
Thank you for that. And I should say, incidentally, guys, this is conversation amongst people who work in the varying fields. That we're for Marco and for Zach. And if I happen to mention anything, please do not consider this investment advice. We're not here to give you specific investment advice on what you should do. We just have questions and we're having conversations here. So I just want to make sure that we're clear on that. In the end, you really have to consult with your own personal experts and determine what might be best for you. But certainly, we'll tell you some of our own thinking around some of these things. This comes from Eric from California. He says, if you had $100,000 liquid to invest today, consider the current times of the pandemic and U.S. presidential election year. What investment strategy might one look into? Assume a moderate to high risk profile. So I'm going to ask you each that question. So Marco, we left off with you. Why don't you pick it up and then we'll go ahead and ask Zach.
Well, it depends on, if you've got $100,000 of investable capital and you're asking me, I'm going to be a little bit biased because I would take that 100,000, probably chop it into three components of $33,000 and go out and purchase myself a $110,000 to $130,000 3-bedroom home in a B plus type neighborhood in some of the markets that I'm familiar with. But that's just my investment strategy. That's my first choice. I could invest it in notes. I could invest it in the stock market. I could invest it in many other things. I just know I understand real estate well. I know what the returns are going to be. It's fairly predictable for me. So that's just my choice. And plus, I like the tax benefits, and I want the tax benefits that I get from real estate. So I just think longer term, medium to long term, I'm going to do much better investing in real estate, well chosen real estate, by using it that way. So I know Zach will probably answer that differently, and you could probably ask 10 other people, and you might get 10 different answers, right? So it's very subjective in that sense, but your overall strategy should help drive that decision.
Yeah, I'll just
thanks. And of course, we expect you to be biased. That's why you're here. You have a bias. So Zach, how would you answer that question for Eric?
Well, I was just going to say, I was going to agree with Marco in the fact that it's a personal decision, and you really do have to figure out what your personal strategy is or what you're comfortable with, and then use that kind of as a baseline to then move forward. I advocate having a very balanced approach to managing your wealth. And so that means I love Marco's idea of buying some actual property, physical property that you can get your hands on. But I would probably use a smaller portion of it. I love the idea of being able to use maybe $20,000 and making a down payment, and then the rest would be available to invest in other areas as well. So for me, a balanced perspective means that we have usually a core amount invested in dividend paying stocks. And these are good, solid blue chip companies that are going to make money in good times and in bad times. This has actually been a really neat microcosm. 2020 has been a neat microcosm of what the whole market often looks like during a recession, during a recovery, during times of panic, during times of excitement. We've seen all of that just over the last 4 or 5 months. And it's kind of neat that we can go and we can look at how different stocks respond to those different types of environments. So there's some good blue chip dividend stocks that didn't pull back that much when coronavirus first hit, that rebounded quickly, that continued to pay their investors dividend. Those are the kind of stocks that I would love to hold with a large portion of the cash that I have. They pay dividends, and then you can use those dividends for your cash flow needs day to day, or if you don't need that money on a day-to-day basis, if you don't need that income on a day-to-day basis, you can reinvest the dividends when they're paid to you into new shares of stock. I do like holding a portion of our wealth in gold or silver or precious metals. I think that's a good thing for us to have some that we hold long-term. And I would agree with what Marco said earlier about how gold kind of holds its wealth long-term. And so it helps you protect your wealth long-term. But there are periods of time when gold actually moves sharply higher. And there are periods of time where gold just treads water and doesn't do anything. We're in the period of time right now where precious metals are moving sharply higher because there's a lot of uncertainty in the economy, and there's a lot of fear of inflation with all of this money being plowed into the economy. And so now is a good time to have a little bit of a larger position in gold, not just to protect your wealth, but also to be able to capture some profits from that move higher. Within that $100,000, I would want to have a small amount put towards some really speculative opportunities. So some of the stocks that have benefited from work from home, some of these newer technology stocks that have just skyrocketed higher because people are signing up for them that never expected to be working from home before. Maybe some of the biotech companies that have been doing really well as they work towards remedies or a vaccine for coronavirus. There are certain areas of the market that we can really get speculative on, and we know that we might lose some of the investment that we put into those, but if we hit a home run, that can really help to accelerate your wealth. So I like having a small amount in that. And then finally, I would say it's important to have some cash in your pocket. The question started out by asking, saying how we're in a election period, and during the election period, there's going to be a lot of uncertainty. There's going to be a lot of good stocks that pull back. There's going to be a lot of stocks that move sharply higher, and plenty of action in between. So I love the idea of having some cash so that when your favorite stock goes on sale, you can buy at a cheaper price and then be able to benefit from things moving higher. I don't think that I would invest towards one candidate or towards another candidate winning. I would want to be invested in companies that can do well in many, many different environments. But I would want to have some cash on hand for when people get fearful, and they will get fearful from time to time.
Just a little bit of a follow-up question on that, Zach. Garrett asks, Zach, what stocks do you like investing in?
I saw that one come through, Garrett. I'm glad you asked. So I'll throw a few out, and there are obviously many that we track, that we stay on top of. One of the themes that I really like right now is 5G. Actually, this week, tomorrow, I believe, AT&T is going nationwide with their new 5G network. Now, I know that there are a lot of questions with 5G as to some of the health concerns and safety concerns and so forth, and I'm going to leave those up to the doctors that know a whole lot more about that than I do. But I do know that this is a revolution that's sweeping across America, and there are a lot of companies that are doing very well because of that. One specific area that I love is the tower companies that rent space on their cell phone towers to the big networks like AT&T, Verizon, Sprint, so forth, and they rent space on their towers for the 5G equipment to be placed. And these towers are having to go up everywhere because 5G equipment needs to be put in much smaller, much more concentrated areas. So these companies generate rent. They're actually most of the ones that I recommend. They're actually set up as real estate investment trusts, which means that they're required to pay you the majority of the rent that they collect, the majority of their operating earnings. American Tower Company, AMT, is one that I really like in that area. And they're generating a lot of cash as this 5G rolls out. The work from home cycle has really kicked off a lot of buying of computer equipment, cell phones, computer tablets, and so forth. And Apple has been a big beneficiary of that. They just announced earnings. They're doing very well. The stock shot higher, but I still think that Apple is a great long-term company to own. They're paying a great dividend. They're going to be able to increase their dividend because their profits are moving higher. So that's a second stock that I'd recommend right now. And then Marco, I think you're going to like this one, but I would be curious to hear your thoughts on it. Invitation Homes. Invitation Homes is actually a company that was started by Blackstone, a private equity group, basically a hedge fund group. And during the financial crisis, they bought houses left and right, primarily from banks. When the banks were foreclosing, the banks were covered up in way too much real estate, and they had to sell at pennies on the dollar. And Blackstone bought many of these houses for 5, 10, 15 cents on the dollar. And they put them together into a company that's now called Invitation Homes. These homes are being held, they're being rented out, so they're generating cash flow. That cash flow is paid to you if you invest in Invitation Home. And that ticker is INVH. And then at the same time, we're seeing the price of homes across the country rise for many of the same things that Marco was talking about earlier. Low interest rates make homes more affordable. We've got a millennial generation that's moving into homes, and so there's a lot of demand. And then finally, we've got the coronavirus crisis that's causing a lot of people to want to move out of major congested cities into the suburbs where many of these homes are owned. So it's driving the price of those homes higher. So if you buy shares of Invitation Homes, you get the benefit of the dividend that they're paying from all the rental income, but you also own a piece of all of these homes that are increasing in value. So the stock price should continue to move higher as the values of those homes move higher. So those are three that came to mind really quick. Again, there's a lot of different opportunities out there, and I like being balanced in many different areas, but those are the three that just kind of popped into my head that I'm most excited about right now.
Great, thank you. Great answer. Boy, the questions are flying. So, and thank you all for that are there for your engagement. As you tell others, I'm trying to find things that are sort of like common threads in some of these questions. So one answer can answer maybe 3 or 4 of the questions as compared to one. And incidentally, obviously, some people are commenting about 5G and the health, maybe the prospective health issues and some of the other issues they have concerns about. So and you should research those on your own. I personally also do have those concerns. Here's what I like the idea of people having doing values-based investing, and I'm not here to tell you what your value should be, but the fact that something might be a good investment for you, but it doesn't align with your personal values, and that would cause you not to want to make that investment. I think that's a really admirable thing. So I applaud the people who are raising their concerns, and as Zach said, you should, he's commenting only from the investment perspective. If you want to look at the wider picture, there's a lot of content out there on 5G and other such things. So good for you to bring that up.
Talking about being an individual investor too. That's one of the benefits you have of investing your own money, is you could put it in the things that make the most sense to you. So I'll just echo you, Patrick. I agree with you there.
Thank you so much. All right, Marco, we've got somebody, this is Smita from New York. For someone just starting out with some capital, but without a good idea about skills and strengths outside of working at a 9-to-5 job, what is the best way to get started on real estate, small business or financial markets? So for you, you can talk to any of it, but real estate. So say, okay, I work a 9-to-5 job. I make enough money, and I've actually put some money aside for investment purposes. And I'll tell you, if I could just say, piggybacking that, one of the greatest premises that I think everybody agreed on in Wealth Breakthroughs, being in all the interviews and having all these conversations, is that I think virtually every expert made the point that you make a lifestyle, or you create your lifestyle based on your income, what you produce in your job, but you build wealth through investment. And that's kind of like, I think, implied in the question, saying, hey, I work 9 to 5. good for you in the fact that you've been able to save money, that you're ready to start investing, and you haven't done it before. So for somebody who's just entering the market for, let's say, real estate investment for the first time, how does somebody get started, Marco?
Well, I can answer this question in many different ways because there's more than one question in the question. But what I'm going to say is not really what I was going to say to start with. A lot of people, this might be a little bit of a shocker for some people to hear this, in the sense that it might be disappointing, but it's the reality. If you are trying to save to invest, you can only get so far by cutting back on your expenses and controlling your expenses. You do have a fair amount of control in how much you spend, but without making changes, you have less control in how much you make. So the saying is, you can't save your way to wealth. If you can expedite how much you save every month and every year, great. It's going to get you there sooner. But really, where you should spend your time and energy, most of it, is not on how much can you cut back to save, but how much more can you work towards making so you can accumulate investable capital faster, because that's the fastest way and the best way to build your chunk of cash, as I call it, to turn it into streams of cash. So you need to figure out ways to increase your income, whether it's a raise, working extra hours, starting a small business, having a second job, scaling and growing your existing business or your practice if you're a professional. But that's the faster way to build up those chunks of cash that you can now redeploy into investments that you can turn into passive income, those streams of cash. So, for someone who's working that 9-to-5 job, you need to start thinking maybe outside the proverbial box of how can I save more by cutting back and really limiting my lifestyle. That works, but it only goes so far. There's not a lot of leverage there. The leverage on the income side is infinite, because if you can build a business or scale something that you already have, or get a new position and increase your income, whatever it is, that will allow you to save faster to put towards investments. Does that make sense?
Makes a lot of sense, actually. And I think it's like everything else, it can't be oversimplified. You make it very simple, but it can't be oversimplified. There's got to be some context put into it, to make it meaningful. So thank you for that, Marco. Good. Oh, I thought you were going to say something. Okay, so just digging into a couple others here. Adriana asks, will this session be available for replay for a few days? I think the answer is yes to that. I see you off camera, Chelsea. So can you nod your head if that's yes? Yeah, okay, that's a yes. Thank you. So yeah, it will be available. We are covering a lot of ground here. I know it's coming kind of fast and furious. So if you want to come back and revisit, it will be here available to review the recording. So I'm happy that that's happening. Mark Jenis, I guess is how you pronounce the last name, says, what about cash flow banking? Zach, do you have a view on cash flow banking at all?
I'd actually like to hear a little bit more. What do you mean by cash flow banking? So I'm not sure exactly what that term refers to,
okay.
Quite honestly.
There's a book I read a while ago called Be Your Own Bank, where you basically create, and it's kind of a complex thing but where you start to become your own bank, and when you're borrowing from yourself, and you're paying yourself back with interest, et cetera. And I think some people refer to this cash flow banking. I think that might be what Mark's talking about. But so Mark, I think if you want to learn more about that, I would look up the book Be Your Own Bank, and it literally it's a whole book on the subject that might be helpful to you. So something for you to consider there. Let me see, we got that one. This could be interesting, and it's also from Mark. So when it comes to your investment in the stock market, Zach, how do you try to figure out what industry to pursue? And maybe there's a predicate question. Should people focus in a certain area or sector so that they have greater depth of knowledge there, and pursue a certain industry, if you will? Or do you think that they should diversify and be in maybe multiple different sectors of investment?
Yeah, I really aspire to the diversification strategy. When I was at the hedge fund and I would tell people that I was a portfolio manager, almost always the next question was, oh, what sector do you focus on? Because there's so many researchers out there who say, okay, I'm the guy who's in industrials, or I'm the auto researcher, or I'm the, whatever the .com or whatever it would be. And that works perfectly fine if you're writing deep, detailed reports on how a specific business works, but that's not really going to change how you make money and how you are able to save and grow your wealth for a rich retirement. I think the most important thing is to be spread into many different areas that are solid, that are reliable, and that pay you a good income. So with the dividend stocks that we look at, I have 3 pillars of investment success. The first is you protect your capital. And by doing that, in order to do that, you need to invest in stocks that are not going to lose you a lot of money. It doesn't mean that they don't trade up and down a little bit here and there, but the underlying businesses are going to be okay through thick and through thin. That's how you protect your capital. The second thing is you look for opportunities that are going to grow your income over time. And so you want to look at lots of different companies that are able to grow the business that they've created. And that will help increase the amount of income that you get over time. In fact, it should increase more than inflation, so that you're not just keeping up with the economy, you're not just keeping up with your spending, but you're actually generating more over time. And then the third is yield, just making sure that you're getting a good percentage for the amount that you're investing. So those 3 things are really the core to when you're looking at a dividend stock. And then from there, I think you definitely need to spread into different areas, so that when you have something that happens, say the Saudi Arabia-Russia agreement or disagreement that sent oil prices plummeting, well, it doesn't matter how much you know about the individual oil company that you own, or the 5 individual oil companies. You can know the CEO, you can have gone and visited their wells, you can have done all the research in the world. But the fact is, the agreement between Russia and Saudi Arabia caused all of those to move lower. And it's not your fault, but it is your fault if you decide to only invest in this one area that could be vulnerable to a big shock like that. So, and that could happen in the auto industry, and that could happen in the industrial industry. That could happen in many different areas that you would put your money into. And that's why it's so important to be spread out into different areas, so that if one area is hurt, another area may be doing well and can make up for those losses.
Great, thank you. Looking at some of the comments, first of all, thank you all for being a community, and the people are like sharing and answering questions for each other, et cetera. So yeah. That's great. Because someone said, who wrote the book Be Your Own Bank? And it's Nelson Nash. Mark Perry knew the answer. This should be like a Jeopardy question. We could have some prizes here. And somebody else, I think, Scott Harrell had basically posted, and I thought that's probably what the question was talking about, but I wasn't sure. It's that cash flow banking is maximizing a whole life policy to generate cash value, then borrowing against it. So you basically you overfund a whole life policy, and then with the what you do overfund, it has a cash value, and you can borrow against that and utilize that money. So you're your own bank as compared to having to go borrow from a bank. And that's a very incompetent, quick description. But if you read the book by Nelson Nash, I think it'll give you deeper insight into that particular thing. All right, this one's Marco. This is in your neighborhood, no pun. It says, when doing a 1031 exchange, and I'll ask you to explain what a 1031 exchange is so that everybody understands that. Do I have to reinvest the total amount I sold the property for, or just the capital gains? That's Sheila from California asking that question.
If you're doing a 1031, you need to reinvest the entire amount. Now, a certain percentage of it needs to be at or above the same amount of debt that you had before. There's 2 key rules with a 1031. You have what they call a 45-day rule, and the 45-day rule basically says that once you close escrow and you have access to those net proceeds, you can't touch it with your own hands, by the way. You have to use a 1031 accommodator, but you have 45 days to essentially identify and tell the 1031 accommodator what those properties are that you are looking to acquire. So you can change your mind, but you have to have it identified within that 45 days. And then the other rule is what they call a 180-day rule. So you actually have to close and take title to those properties within 180 days. Now, if you don't use your entire amount from the 1031 sale, let's say you got $100,000 of net proceeds from that sale and you only deployed 90,000 of it, you will be taxed for that 10,000 that is unused. You can still invest it, you can still do what you want with it, but it is taxable at that point. So that's just a very quick, high level answer to the question. If you're in the middle of doing a 1031, whoever asked this question, uh, make sure you have regular ongoing communication with whoever's doing your 1031, because they will make sure that you are staying within the lane and following the rules. And as kind of a side comment, you should actually be in conversations with them as early on as possible, because we get so many clients contacting us sometimes literally a week before they close, and they're freaking out because they're saying, oh my God, I have this close coming up. I haven't even identified any of my properties. And so sometimes they're in need of like 6 or 10 properties like right away, because they've got 7 days to identify those things. So don't leave it for the last minute. That's a bad mistake.
Great, thank you. And so let me remind everybody that we're still in the free viewing period of Wealth Breakthroughs. And as you can see, you can buy the entire series, and also there's some spectacular bonuses that come in the packages with Wealth Breakthroughs that are available to you. It's steeply discounted right now. As you can see, just from one conversation, the type of value that comes out of this. So I really want to recommend that that you go ahead and we're coming to the end of the whole this whole event now, this free viewing period and this world premiere of this particular project. So now's the time to jump in and get this. It's a library of content with dozens of experts who have phenomenal insights that are not only great for you, but especially if you have children or partners, business partners, romantic partners, whoever it might be, going through this information, spending time with it, etc., is something that pays dividends for a lot of years. The investment is a very small investment. The content, I think, is as you've seen by now, is really great content. So I can't encourage you enough to go out there and learn from all of these people. I believe in success libraries. I've had a success library my entire life since college, where I always had materials to go to that were either an audio or video or even reading. And in this library, I could go and I could pull things out on a rhythmic basis. I can absorb this information. When you get Wealth Breakthroughs, incidentally, you also can get the audios, the MP3s of the entire thing. So where you're working out, driving around in your car, you could be listening to all this, and it gets baked into your mind, into the cells of your body, and that's how you start to become better. Because, and I say this, what prompted me is I'm seeing so many questions saying, how do I get started? What's my first step to do this? And it's in there as far as, so many people speak about the path that you need to follow, and there's varying opinions on this. If there's anything you should know about investment, it's not one size fits all. There's so many different aspects. What Garrett Gunderson referred to, and he was in Wealth Breakthroughs, as investor DNA. You're all very different. You have different stages of your life. You have different ambitions, different visions for your future, and all those things have a massive impact on what your considerations are for investing. So I just want to encourage you that I could tell you that it came out better when we were producing this and we set out on this project. We had a certain ambition, and what we achieved was far better than what we were even shooting for. And it's not because we're great, it's just because the people like Marco and like Zach who showed up, they brought so much value in these interviews that it was beyond what we could have hoped for when we started the project. So I just really want to encourage you all to do that. We've got a few minutes, or maybe time for one or two more questions here. Let me jump into them. I'm a complete newbie with options trading, and I feel extremely lost and overwhelmed. That's Heidi from Florida. Do either of you have comments on options trading, or is this something that we have to pass on? I can tell you we did interview some people in Wealth Breakthroughs on options trading, and they were multi-decade, high-level professionals in it. So you can find it in the series, but I don't know if either of you have a comment on that.
I do. Actually, we used options quite a bit at the hedge fund that I was working at. And many people look at options and they think that they're risky because there's so many stories out there of people who have lost a lot of money investing in options. There are really smart ways to go about using options, and there are really dangerous ways to go about using options. You could say that options are a lot like a power tool that you have in your garage. They're excellent if you use them for the purpose that they were made for, and they're very dangerous if you put them in the hands of somebody who doesn't know what they're doing with it. So what I would say is, if you're interested in learning about options, find some good reading material, listen to the Wealth Breakthrough interviews with the people who know what they're doing with options. I've got a particular option service that I use that actually helps generate cash flow for retirees, and it's one of the ways that I love showing people how to use this tool in a very safe, in a very healthy way. And the main thing that I would say is, if you're just getting started, start small. Do 1 or 2 contracts, see how it works, ask them questions, learn from the experience. Don't try to make money on your first couple trades. Do your first couple very small trades so that you can learn what happened, what turned out, what could have happened, how does this whole process work? And that way you'll have more confidence and you'll have much more skill to then be able to use this tool to build something beautiful in the future.
Thank you, Zach. Great insights. And I believe several of the trading platforms, brokerage accounts, like I know in my TD Ameritrade, I think you can paper trade. Like you could just, you can do it without risking actual money, and it will show you kind of what happens, right?
So I've got mixed feelings on paper trading. I think it's great for education to understand how something works. So yes, Patrick, I would say take advantage of those. But still, even after you've used a paper trading account, I would say still start small with real money, because when you're using real money, something changes. It just does. Yeah. You start to see, oh, I'm making some money. Oh, it's going down. And you start to, you're at least tempted to make emotional decisions, whereas that might not even enter your mind if you're looking at the paper side. So yes, that's a great tool. Use the paper trading, and paper trading just simply means you're using fake option contracts that trade the same way that they normally would, but it doesn't affect your net worth. So it's a good tool, but still start small when you're using real money.
Yeah, and thank you for saying that, because I think just from the mechanics of the trades you can learn on the paper, but there's a very big difference when you're putting real money in versus. I see all these online heroes, playing like poker or something, with the and all the billions of dollars they make, but it's not. There's no money. There's no real money, so of course they're going to behave very differently.
Yeah, for sure.
I think we have time for a final one here. And again, thank you all for tuning in. I'm sorry we couldn't get to all the questions, and you'll be on the lookout. Maybe in the future we'll do some more of these and really try to continue to serve your questions. I also want to thank, there's people who are literally answering questions in the thread, and some people with some real experience here giving really good answers. So thank you for just participating and engaging in this. Rather than sitting back and just kind of folding your arms and watching. It's really great to know that you're all engaged. So thank you for that. This comes from Andre in Singapore. It says, how can I source investors to fund property ideas so that we can turn opportunities into real estate cash flow? So maybe another way to ask this is, if someone says, hey, I maybe have a little bit of money, but I'd like to raise some money to do some real estate investing, and maybe somebody would say, hey, I found out a pretty good option trade. I want to raise some money to do that. So I'll give each of you maybe just take a minute on how, and start with Marco, how you might go ahead and pass a hat around to raise some money to get started in real estate investing.
Well, interestingly enough, I just recorded and released a podcast episode on this subject. I didn't go too deep into it, but deep enough that it answers the question. When people are looking to raise capital,
Marco, I'd like to promote that. So where can they go get that podcast?
Just go to passiverealestateinvesting.com. It's the same name as the podcast, Passive Real Estate Investing.
Perfect. Thank you. I didn't mean to interrupt you, but go ahead.
Oh, you're fine, Patrick. So, the low-hanging fruit is your friends and family, the network of people that you know, and they know you and they trust you. So as long as they trust you in the right way, it can be easy enough to raise that seed capital or that investment capital, or just partner with, your relatives, friends, and family. But beyond that, you're really going out to, associates and other people in the industry. You're networking at real estate club meetings or other types of investment events. So beyond that, you get into what is essentially a syndication, where you're actually out soliciting for people to invest in your project, be it real estate or otherwise. Then you start getting into, securities laws, and you have to make sure you follow those rules. So, that gets a little bit more complicated, and you need professional legal advice at that point. But with people you already know, if you already have an established relationship with people, it's not that difficult to raise capital if you have the right deal. It's usually the money follows the deal. So it's not hard to raise capital if you have the right deal.
And I think that's a really good point, Marco, is that rather than saying, let me raise the money and go out and figure out what to buy, have a deal, understand all the elements of it, and say, I'm raising money for this. That would be much more compelling if somebody came to me and said, hey, do you want to join me on this investment? I feel much better
way
about
to
that.
do it, Patrick, is really start talking to the people that you are thinking about as partners, and tell them what you're doing or what you're planning to do. That way, when you have the deal, if you're on a short timeline, like you only have, let's say, 30 or 45 days to complete your due diligence and execute on closing that transaction, then you already have these people somewhat lined up. They're already going to be open and responsive to that conversation, because they're not going to be shocked or surprised, like, what are you doing? They know you're coming to them with a deal.
Yep. Good advice. Thank you so much. Zach, anything that you'd add to that?
Yeah, I guess I would say the mirror to the deal that you're talking about, Marco, would be on the investment side. It would be some kind of system or some kind of strategy that you have that you can already prove, hey, I know how to make money, and this is what I do. This is specifically what I do and how I can help you make money. And that goes back to the paper trading that we were talking about. It might make sense to spend some time trading a specific strategy in that paper trading account, and then show that to a friend or family member and say, hey, this is what I've been doing. I'd love for you to partner with me, and we could invest together this way. A couple things on that, though. I would say one is you should have your own money, some of your own money, even if it's just a small amount, some of your own money put beside the person that you're asking to help you with. That way you win and you lose alongside them. Because it really does feel weird if you're losing money for somebody else, or if you're making money for somebody else and you're not participating at the same time. And then I would say I've been in the shoes of managing money for other people, and I've been in the shoes of managing money for myself. And I can tell you, it's so much easier to make good decisions when you're managing money for yourself, because you're not thinking about what is this person going to think, and is this person going to question what I have, and do I have to answer the phone while I'm in the middle of doing my research because I need to explain this. And so I would encourage you to get to a place where you really can be independent, and that may take some of the strategies that Marco was talking about. Work the extra job, I actually wrote a book called Zach Scheidt's Big Book of Income, and it's 47 different ways to generate extra income in your life. And those ways may be used to build that trading stake that you want to use to then grow your wealth. So get creative in figuring out how to build that beginning stake, but have a deal or have a strategy. Know what you're planning on doing, and then stick with that plan. And that's the best way to really have success in the markets.
Zach, just to your point, and this will be part of a closing comment, but just to your point, I've got a son who just graduated college with a double major in finance and economics, and he could have been maybe a little overconfident how kids in college, they think they've learned everything, but I put a sum of money, a small sum of money in a brokerage account, and said, okay, show me, you think you can, trade and you can do this, go ahead. And in about a couple months time, I was very impressed what he did. So I increased it by another 50%. And within 6 months, he was, I think about, 60%, of, basically a 60% return on that in 6 months. So annualize that. Yeah, I mean, really way ahead of the S&P and everything else. And it was pre-COVID, and through COVID, he really did the right things, figured things out, did a little options trading, and it was just, I was very, very impressed. So now he's got another aunt who said, "Hey, will you manage for me? You've done very well in this account. I think you could." And to your point, I'm just validating is that even you can start with a small account, show that you can produce and you can perform, and you can do that somewhat consistently. And then he didn't have to go out and ask. His aunt came to him because she had heard about it. So anyway, I think that's really a good thing for good advice on both your parts relative to all this. So let me just say this: number one, and I'm seeing it in a thread too. So many people are showing their appreciation, Zach and Marco, for you being here, and they got a ton out of it. So, and my appreciation also. Thank you for being here. I think you guys just showed up and gave your heart and soul, in every way that you could for this hour. So thank you for that. And for those of you who came here and spent your time with us, I hope we gave you back a lot of value. I appreciate you taking the whole Wealth Breakthroughs ride with us. Really amazing, to just take that journey and to be able to share it with you. And, just keep looking at your emails and, be on the lookout for more events and other things that we'll be doing in the future. I will again remind you that, the free viewing period is going to be ending pretty soon. You will be able to acquire Wealth Breakthroughs right now. It's got phenomenal bonuses and pretty steep discounting for it. So now's the time to get it. Again, Zach, Marco, thanks so much. And for all you were out there, it was a pleasure to be with you. So thank you.
Thank you.
Hey, Patrick, do you have a quick second?
Yeah, go ahead. Are we still, you want to say this live or do you want us to end?
Yeah, live.
Okay, go ahead.
I just want to say two really quick things. One, quick shout out to Nick. I'm reading the comments on the side here. He's actually closing on 2 properties this Friday through our company, through our network. So Nick, you're awesome. Thank you. And I actually took a screenshot of all the comments. So the questions that we didn't get to here today, I'm going to try and answer them on my Ask Marco episodes of my podcast. So at least they get answered, and I'll just take a stab at them off this air and on my show.
That's awesome, Marco. Thank you so much for doing that. Yeah. I appreciate it. And I'm glad that you're recognizing some of the people in the threads. This is great.
Yeah.
All right, folks. So anyway, and for the whole team to help put this together, thank you so much for putting it together. Chelsea, Tom, Ali, thank you all. I appreciate it. So, and again, great to be with you all. So this will conclude, and just know this will be up for about another 24 hours or so if you want to watch the replay. Thanks very much, everybody.
Thank you.